Well, everybody knows they need to be saving for retirement, but it can be hard to do. Most experts say you need at least $1 million to retire comfortably, but very few people have saved that much up. So how can you start doubling your nest egg now? IRAhelp.com founder Ed Slott is here with his advice, and he is an expert, that's for darn sure. So I see these numbers all the time. They come across my desk. 48% of boomers are not on track to afford basic expenses in retirement, and a third of Americans have no savings at all. It's astonishing to me. But yet, if you are diligent about setting aside money and doing it all the time, over and over and over again, can you double your savings?
Easily. Everybody knows. I feel like the guy on Geico. You know, everybody knows that. If you keep putting money away, the thing is you have to do it. And the best way, everybody knows that, take it off the top. Pay yourself first. Do it on automatic, so you can't say, no, not this week, no, not this month. And the earlier you start, the better off you are.
Absolutely.
The greatest money-making asset any individual can possess is time.
Yes, I
and
totally
the younger
agree
you
with
are,
that.
the more of it you have. So you have to capitalize.
It's all
on
about
it.
the time value of money, as we learned in business school. I totally sign on to that. But what's interesting, though, is I think people think if I'm going to try to double my money in 10 years, then I have to have like a huge stock allocation. It has to be 100% stock, 90% stocks. No.
No, that's dangerous. If you get too aggressive, too late, that's too dangerous. You can't have 90% in your 60s and 70s in the market hoping for that big hit. What if the big hit's the other way?
Well, one of the big hits we were talking about in the break is taxes.
Yeah.
You say that's something that people really need to think about. What do I need to know?
The difference between tax-deferred and tax-free. It comes down to one little word that can mean a lot, and that's where your doubling can be. That little word is yet. Tax-deferred means you won't pay tax on it yet, but you will. Tax-free means you'll never pay tax on that money. You have to start building tax-free because tax-free money grows the fastest because it's not eroded by taxes. It's a big difference, for example, between an IRA and a Roth IRA. You had $1 million number up there. If you have $1 million in an IRA in retirement, depending on the tax rate, maybe it's only worth $600,000. If you have $1 million in a Roth, it's $1 million.
But you do pay that up front then in the Roth. You do pay the taxes.
You give up a small, relatively small deduction up front to have tax-free income for the rest of your life. And theoretically, it only works in theory. People say, well, you could have invested that money. Nobody ever invests a tax refund. I know from dealing with people, when I used to do more taxes, as I was preparing their taxes, oh, where are we going to spend that refund? Oh, let's pay the, let's go.
All right. I have to ask you another question before you go, because we talk about this all the time.
Yeah.
And I try to tell people, look, you have to save and invest. I know things went awry in 2008.
Right.
I know things got wacky.
Yes.
I know it scares you to death, but you've got to put the money down.
And right off the top, a Roth IRA contribution, $5,500, $6,500 if you're 50 or older.
End of the year.
Do that.
Bingo, bango.
Yeah, do it. Do it.
All right. Ed, it's good to see you. Thank you so much. Good to see you.